Hello friends, welcome. Friends, on 8th of February 2024, RBI came out with various surveys. Now, if you look at this the website in front of you, you can see. So this is the website, RBI website. You can go to this link and you will get these surveys. So there are 7 surveys which are listed out in this page. Now, friend, these surveys are very important documents because it gives us a sense of a feeling as to how the stakeholders in the economy is assessing the various dimension of business, right? Or various dimensions of the economy. For example, how the consumer is assessing what kind of inflation that will happen in future, what is their view of the current inflation situation, what the companies are assessing from the point of view of how the various dimensions of their business are going to change, how the banks are assessing their outlook as to how the loan demand is going to change, how their terms and conditions of the loans are going to change. So it gives a very good view as to how the outlook of the economy is going to change going forward. It captures 2 different dimensions. One is the assessment, the current assessment, and another is the future outlook. Now, why I am emphasizing on these documents is because the current assessment, which you can see today, and the future outlook, which you are going to see tomorrow, they are highly correlated. So, because you know the data as far as the current assessment is concerned, so you will get a sense as to whether this survey really is giving the right kind of picture or not. So if those 2 curves are correlated in nature, it kind of gives you a sense that these documents can be a useful tool to gauge what kind of planning that an individual or a company should make or foresee as to how the economy is going to perform in future. So that gives a very good cue. So looking at this document, I think is very important so that we can plan our businesses, plan our economic, activities in a much more, effective way rather than basically looking into the dark, right? So what I'm planning to do is I am basically going to take you through 2 important surveys, which are basically, bank lending surveys, what the banks feel about the terms and conditions of the loan and the demand of the loan, and how the businesses think that the various dimension of their economy is various dimension of their business is going to get affected in future, what their future assessment of various dimension of business is. So let's look at the data so that you get a sense. So what I am planning to do is that I went into the time series data. So if you look at the time series data, since I told you that I am going to look at only the 2 services, the last 2 services, so I have downloaded this time series data. So there are various tables in this document, but just to give you a view what this document is all about, the Service and Infrastructure Outlook Survey talks about that the survey assesses the business and sentiment of the current quarter and expectation of the ensuing quarter based on qualitative response on a set of indicators reflecting the perception of responding companies of functional aspect. And then there is a bank lending survey which says the survey assesses the bank sentiment of the current quarter and the expectation of the ensuing quarter based on the qualitative response of the set of indicators and perception of the bank loan demand and terms and conditions of their outlook in near term across major sectors. So this is how they are basically doing the poll or the assessment. And then there are various tables and there are various parameters on both sides. So here is the service and infrastructure surveys. There are tables. So there are actually how many tables? There are 17. How many are there? So if you look at this is 13 tables for services and 13 tables for infrastructure, and each of the tables are assessing a particular dimension of the business. Similarly, there are 14 tables which are divided into 2 different categories. One is the loan demand and the loan terms and conditions, and they are assessing all sector: agriculture, mining, quarrying, manufacturing, infrastructure, services, and retail and personal. Now, when you look at the static data, you really doesn't get any visibility as to how the demand is changing or how the perception is changing. So it is better to look at the time series data. But time series data is very difficult to look at because they are all aggregated into multiple sheets. See, there are so many sheets here, right? So you have to aggregate this data in one single sheet so as to plot the information. So what I have done is I have already done that work for you, and here are the output of the survey. Now, so there are two. I told you there are two different surveys, right? One is the bank lending survey, another is the RBI services and infrastructure outlook survey. So let's look at these two dimensions one by one. So what I will do, I will look at because this is basically responded by the company, and what they have done is that I have categorized the way the dashboard has been created is that I have broken down the dashboard into two different compartments. The top is for infrastructure, and the bottom block, this is the block, is for services. And then there are four different dimensions which I am measuring: increase, decrease, no change, and NR. When I say increase, means these are the percentage of respondents who are saying that this dimension, whatever is shown here, cost of finance, is going to increase. And decrease means there are certain percentage of people who believe that this will decrease. No change means they believe there is no change. So if you add these three dimensions, they will come out to be 100%. Now what is NR? NR is the extreme dimension, is a subtraction of the extreme dimension, means the increase and decrease. So if you subtract 40.7 here, if you look at this, from 8, you'll get 32.7, right? So this is NR, which kind of aggregates the extreme changes in one single metric. But I have plotted, for the sake of simplicity and understanding, I have plotted all the four different matrices on which the assessment is being done. So this is basically for future assessment. This is not the current assessment I am plotted for the future assessment, right? Now let's look at each and every dimension. Let's look at availability of finance. Now if you look at availability of finance for infrastructure, you will find that there is a large percentage of people believe that in the next quarter, that is March 24, the availability of finance is going to increase, which is quite it resonates quite well because the government is very focused on infrastructure, right? So a lot of allocation has been made on the budget, right? And there are very few people who believe that there will be no change, and therefore the difference between improve and worsen. So, and there are very few people who also believe that, I think substantially low amount of people believe that there will be the situation will worsen, which is 1.68%, right? So the difference is 61.34%. So this is a positive change. So infrastructure availability of finance is going to improve significantly. As far as services are concerned, it is going to improve, but not going to improve substantially. But if you look at the trend, you will find that the infrastructure focus has actually increased significantly since FY22, right? Before that, it was kind of pendulating, going up and down. But then there is this rising trend, which we can clearly see from FY22, and then slowly the numbers are increasing. So it's kind of showing an upward trend, right? In services, I think there is an improvement though, but it is not the trend is not sharply in the rising path. So there is, but both of them actually are showing increasing trend. But infrastructure, you can clearly see the availability of finance is going to be more. Now regarding cost of finance, if you see, again the cost of finance, very strangely, there's belief that the cost of finance will increase, right? So this is what it says, that most of the respondents believe that the cost of finance is going to increase, which is kind of resonates with the inflation, the growing inflation, because as the inflation will grow, so the cost of finance will have a direct correlation with inflation. So we should not be surprised by this. Services sector also is showing a similar trend, but it is not as high as the infrastructure piece of the economy. Now cost of inputs, let's look at cost of inputs. Now cost of inputs, what it says, as far as infrastructure is concerned, it says that it will increase. But if you see that in FY22 and 23, actually in the middle of FY22 to 23, there was a significant increase in cost of inputs. That was the perception. Then it kind of went down, and then it is showing a slightly increasing trend. And similarly, you can see in the services sector also, it is slightly increasing trend. Okay. Now, what about the full-time employees? When I say full-time employee means whether there is a need for full-time employee will increase or not. Now, as far as infrastructure sector is concerned, 63.25% of the respondents believe that yes, the full-time employees is increased, which is higher than the earlier quarter, right? And then if you look at the services sector, it is not as significant as the infrastructure sector, which basically clearly shows the focus on infrastructure as far as the government is concerned and the overall economy is concerned. Now let's look at the overall business situation. The overall business situation is going to become better as far as infrastructure sector is concerned. It clearly shows a rising trend. See that? It clearly shows, and no change is going in a reverse trend, and worsen, is stagnant. Means there is a lot of companies believe that as far as regard infrastructure is concerned, there will be the business situation is going to improve. And as far as service sector is concerned, it is also going to improve, but it is not as significant as what focus that the infrastructure sector is showing, right? Is demonstrating the perception. Now, part-time and contractual employees, same trend. See, just like the full-time employee, the infrastructure sector will see a rising growth of part-time and full-time employee. And as far as service sector is concerned, it is not going to be that significant. It is actually showing a downward trend, right? Now, physical investment, see, it is a huge jump from December 23, I think because of the budget, or maybe, I don't know whether the budget, the survey include the budget or not. I'm not too sure because what is the timing of the survey, but it's a very, very significant jump from 46.8 till 75.27, means a large percentage of the companies believe that there will be a significant investment in infrastructure, whereas the service sector, the increase is not that significant. And then profit margin, let's look at profit margin. Again, the profit margin, see, there is a huge jump. So there is basically a change of trend from 37.3% in December 23 quarter till March 24 quarter, which is the end of Q4 FY24. There is a significant, increase of infrastructure, right? And then we have the service sector. The increase is not that significant. Now let's look at the salary and wages. The salary and wages, if you see, the increase is going to be significant. See, so even in salary and wages also the infrastructure sector is showing a significant increase, and for service sector it is almost stagnant, right? And then we had the selling price. Let's see selling price of product, goods and product. Here also you see the rising trend as far as infrastructure sector is concerned. And the turnover, let's see the turnover. Here also the same trend. So I think you get a very good sense that how the infrastructure sector is showing a very much increased focus, and the perception of the companies are also significantly in favor of a rising trend in the various business dimension of infrastructure sector. Service sector is showing some kind of stagnation. There is not that significant, euphoria of growth, though it is not bad, but it is not as significant as it is for the infrastructure sector. So this is regarding the overall outlook business survey of RBI. Now let's look at the bank's lending survey. Now, if you look at the bank lending survey, there are two different dimensions which I have captured here, which is the loan demand and the loan terms and condition. And I have captured all the sectors here in y-axis, and the time is on the x-axis. And this portion we are going to focus, which is going to be the next quarter, because it is going to be not the current assessment, the future outlook. Now, from a loan demand point of view, if you see, for all sector, there is a rising trend, right, compared to what we have seen in the earlier quarters. Agriculture sector is not going to be that much. It is a slow down as far as the loan demand is concerned. Infrastructure sector, it's really strange. I don't know why the companies believe that there will be a huge demand on finance, but the banks believe that the demand of finance is not going to be that much. It is going to be lower than that. Maybe there is some kind of perception difference between the companies and the banks. So anyway, but it is not that significant. Manufacturing sector, yes. Most of the banks believe that the manufacturing sector the growth is going to be higher, right, as far as the loan demand is concerned. And then the retail and personal sector, yes, it's almost similar, and the service sector is showing a downward trend. Now let's look at the loan terms and condition. Now terms and condition means agriculture sector is showing stagnant, infrastructure sector is also showing kind of stagnant. Manufacturing sector is slightly higher than what we basically have seen in the last quarter, and the mining is showing in the downward trend, and the retail is showing in the downward trend and the service sector is showing in a stagnant trend. So loan terms and condition basically means that how stringent the loans and terms and condition is going to be. So friend, this is what I have. I thought that will be useful for us to basically look at how these two different surveys are kind of giving the picture of the overall economy and the sentiments as to what we are going to see in the next future. So I think probably you might have enjoyed this video, and many thanks for your patient listening. I will come back to you with the next video next.